Hello everyone, I am Dr. Soundararaj. These are all a few details about me related to my career. I am going to discuss with you another problem related to funds flow statement. I have already released a few videos on the same topic. Links for those videos are given in the description. Kindly go through those videos also so that you can gain a better understanding over funds flow statement. At the end of the video, if you like the video, give a like to the video and do subscribe my channel as well. This is a problem related to the preparation of funds flow statement. From the following balance sheets, make out number 1, statement of changes in working capital, and number 2, funds flow statement. Balance sheets of Alpha Limited are given for the years 1992 and 1993. Let's quickly look at the items of liabilities. Equity share capital 3 lakh, 1 lakh. You find increase in capital amounted 1 lakh, which is a source of funds because of issue of additional shares. 8% redeemable preference capital 1,50,000, 1 lakh. You find there is a reduction of 50,000 rupees in the value of redeemable preference capital, which is nothing but redemption of preference shares, which is an application of funds which will appear in the funds flow statement. Capital reserve, you find 10,000 rupees increase in capital reserve. Let us come to know what is the reason for it while we discuss about the adjustments in the problem. General reserve, you find again 20,000 rupees increase in the value of general reserve, which could have been appropriate from the current year profit. So it will be adjusted in the adjusted P&L account. Profit and loss account, opening and closing values of profits given in the problem. Proposed dividend 42,000, 50,000. You can assume that the 42,000, which is the balance of a proposed dividend for 1992, has been paid this year. And what about the closing balance of a proposed dividend? That's a balance for 1993. You can assume that this 50,000 rupees has been proposed out of current year profit. So 50,000 rupees will be taken over to the adjusted P&L account, whereas 42,000 rupees, the dividend proposed should have been paid within this year. So you assume that it goes to application of funds. Sundry creditor is a current liability, bills payable is a current liability, expenses outstanding is also a current liability. These three items will be taken over to statement of changes in working capital. If there is an increase in current liability, it leads to decrease in working capital. If there is a decrease in current liability, it leads to increase in working capital. Provision for tax. You can either prepare a ledger account or you can go for an alternative like the proposed provision for taxation of 1992 has been paid this year, and the provision for taxation for the year 1993, which is amounted 50,000, has been created this year from the current year profit and loss account. Goodwill, you find there is a reduction in the value of goodwill 20,000, which is nothing but goodwill written off. Again, it will be taken over to the P&L account, adjusted P&L account, because this is a non-operating expenditure. Then land and building, fixed assets, you find there is a decrease in the value of land and building by 30,000. We will prepare ledger account considering these opening and closing balances plus additional information if any, and decide whether there is a sale or a depreciation or there is any purchase like that. Plant account, plant and machinery, you can assume 80,000 rupees, 2 lakh rupees, we will prepare ledger account for it. Investments 20,000, 30,000. You find there is an increase of 10,000 rupees in the value of investment, but we can't come to a conclusion just like that now. After looking over the additional information also, we will decide about what is to be done with the investments. Debtors, stock, bills receivable, cash in hand, cash at bank, all these are current assets that will be taken over to statement of changes in working capital. Again, to record these items, we have to consider the two formula which I have already explained, which is nothing but increase in current assets leads to increase in working capital, decrease in current asset leads to decrease in working capital. These two formulae you have to consider to find out whether the change in these current assets contribute for increase in working capital or decrease in working capital. Preliminary expenses, there is a reduction in the value of preliminary expenses by 5,000, which is nothing but preliminary expenses written off. This is again a non-operating item which would be taken over to adjust a P&L account and debited there. Then let's look at the note, which is nothing but additional information. A piece of land has been sold out in 1993, which is a current year in the problem, and the profit on sale has been credited to capital reserve. What is the increase in the value of capital reserve? 10,000 rupees. Therefore, there is a profit of 10,000 rupees in the sale of land. So we can quickly look at these two figures. Opening balance of land and building 2 lakh, closing balance 1,70,000. Therefore, 30,000 rupees worth of land and building sold out this year. And when they sell out the land and building costing 30,000, they have earned a profit of 10,000. Therefore, the sale proceeds of land and building would be 40,000. If they have sold land and building for 40,000, they have recovered the cost amounted 30,000 and the balance 10,000 is transferred to capital reserve. So now we understand the reason for increase in capital reserve amounted 10,000. And the 40,000 rupees, the sale proceeds of land and building will be taken over to sources of funds in the funds flow statement. A machine has been sold for 10,000 rupees. The written down value of the machine was 12,000 rupees. The book value of the machine and the date of sale is 12,000, but it is sold only for 10,000. Therefore, they have incurred a loss of 2,000 rupees, which is a non-operating item. So that will be again taken over to P&L account, the loss on sale of machinery. The 10,000 rupees, the sale proceeds of machine would be taken over to sources of funds in the funds flow statement. Depreciation of 10,000 rupees is charged on plant account. So in addition to this sale of machinery, they have also charged a depreciation amount at 10,000 rupees on machinery, plant and machinery, which is a non-operating, which is a non-fund expenditure. Therefore, in the adjusted P&L account, it would be recorded as non-fund expenditure, 10,000 rupees. 3,000 rupees by way of dividend on investments is received. So they have received 3,000 rupees by way of dividend on investment. So the 3,000 rupees receipt would be recorded in the sources of funds in the funds flow statement. And what is the next point there? It includes 1,000 rupees from pre-acquisition profit, which has been credited to investment account. Since the 3,000 rupees includes 1,000 rupees of pre-acquisition profit, and that has been credited with the investment account, separated from investment account. If you credit investment account, the balance, the 1,000 rupees balance will come down from investment account. So therefore, you can pass a journal entry like dividend account debtor to investment account. So the 1,000 rupees will be separated from investment account, which was originally credited. Then for the remaining balance, if any, you can find out whether there is a sale of investment or purchase of investment. So that's the idea of the third adjustment. An interim dividend of 20,000 rupees has been paid in 1993. So this has to be provided in the P&L account, and this should also be taken over to application of funds. This is in addition to the proposed dividend. Regarding proposed dividend, what I said, the last year proposed dividend is paid this year, and this year proposed dividend 50,000 rupees has been provided in the P&L account this year. So this is what about the idea of the problem. You can pause a video and go through the statement of changes in working capital, which would have been prepared considering the 4 formulae which I have already explained. Now let's look at the workings, starting from the workings here. Land and building, opening balance written, closing balance written. As I said, land and building costing 30,000 rupees, sold at a profit of 10,000 rupees, which has been transferred to capital reserve. So therefore, the sale proceeds from sale of land and building is 40,000. What is a journal for selling land and building? Bank account debtor or cash account debtor 40,000 to land and building 40,000. Since there is an element of 10,000 rupees profit sitting which is transferred to capital reserve, what is the entry to be passed? Now for the 10,000, you have to debit land and building account debtor to capital reserve. So land and building account debtor here, bank account debtor 40,000, the cost of which is 30,000. You have a profit element of 10,000 included there, and that is why you pass the entry bank account debtor to land and building. Now the 10,000 rupees, which is nothing but the profit element sitting there, is now separated and transferred to capital reserve. What is the entry? Land and building account debtor to capital reserve 10,000. Right. Now investment account, opening balance 20,000, closing balance 30,000. Now we separate the 1000 rupees of dividend which is received out of pre-acquisition profit. So dividend account debtor to investment. If you credit investment which is a debit balance, the investment account balance will come down by 1000. That's an idea. So after you do so, now you look at it, 20,000 minus 1,000. So obviously there should be a closing balance of 19,000, but what is the actual closing balance? 30,000. You find 11,000 rupees increase in the value of investment, which is nothing but purchase of investment. So investment account debtor to bank account. The asset which comes in, has to be debited. So investment account debtor, the asset which goes out is credited to bank account. So this is the idea of investment account debtor to bank account. And the next ledger account prepared here is plant account. Opening balance as usual for assets written in the debit side, closing balance is written in the credit side. And what was stated in the problem? Plant and machinery, here the book value of which was 12,000 sold for 10,000. What is that? Book value of which was 12,000 sold for 10,000. So what is the journal entry? Bank account debtor 10,000, P&L account debtor 2,000, to plant account 12,000, and that's the entry passed. Fine. And also there is another posting here, depreciation. They have charged 10,000 rupees of depreciation on plant and machinery for this year. So depreciation account debtor to plant and machinery account. So totally they have deducted 22,000 rupees from 80,000. If you deduct 22,000 from 80,000, the closing balance should be 58,000. But what is actual closing balance? 2 lakh rupees. So you find nearly 1,42,000 rupees increase in the value of plant, which is nothing but what is the only reason for increase in the value of fixed asset in management accounting is purchase. So plant account debtor to bank account, which is nothing but purchase of plant for a value of 1,42,000 rupees. Now let's look at the adjusted P&L account. In the adjusted P&L account, as usual, the opening balance of profit is written in the credit side, closing balance is written in the debit side. Now you look at the items. When I explained about the items of liability in the balance sheet, I said there is an increase in general reserve amounted 20,000, which is nothing but a figure appropriated from current year profit. So again, it has been reversed because it's a non-operating item. Then the current year proposed dividend should have been appropriated out of current year profit, which is a non-operating item, again reversed. Then interim dividend has been paid, amounted 20,000 this year. If it is not provided in the P&L account, it will not be paid. So it should have been provided, and that is also a non-operating item reversed here. Then provision for tax, as I said, the opening balance of provision for tax, you can assume that it has been paid this year. It will go to application side of funds flow statement, and the closing balance of provision for tax. This is one method. And there is other way where you can prepare separate ledger account for provision for tax. So to provision for tax, this is a figure of the current year, 50,000 rupees. If you look at the balance sheet, you can come to know, see, 50,000 rupees is the provision for tax for the year 1993, and that is what here debited in the adjusted P&L account. Goodwill has been written off to the value of 20,000. If you refer the asset side, you can come to know, which is a non-operating item. Preliminary expenses written off, amounted 5,000, again a non-operating item. You remember the machinery with the book value of 12,000 sold for 10,000, consider in the machinery account. The 2,000 rupees loss on sale of machinery is debited here in the adjusted P&L account. In addition to that, they also charge depreciation amount at 10,000 rupees on plant and machinery, which has been reversed because it's a non-fund expenditure, and that is why it is reversed here. So with that, the debit side of adjusted P&L account is over. Now let's go to the credit side. They have received 3,000 rupees dividend, out of which 1,000 rupees is received from the pre-acquisition profit, which is a capital item, and that will not be recorded here in the P&L account. Only the revenue items could be recorded in the P&L account. So the 2,000 rupees, which is nothing but a revenue item, which is a non-operating income, and that is why it is reversed. If it is credited in the adjusted P&L account, you assume that it is again subtracted, which would have been originally added to calculate net profit. Then the balancing figure of adjusted P&L account is 1,93,000 rupees. This is what funds from operation. So now let's get into the funds flow statement. Issue of equity shares, I said increase in the value of equity shares amounted 1 lakh, which is nothing but issue of shares. Sale of land, if you refer the ledger account for land, you can understand because the land valued 30,000 sold for 40,000. So here we can only record the amount received in the funds flow. But that is what the total fund which came into the business in the name of sale of land. Sale of machinery 10,000 rupees. The machinery with the book value of 12,000 but sold only for 10,000. So sale process is recorded here 10,000. Dividend, whether it is a capital item or revenue item, the total amount of dividend received on investment 3,000 rupees is the fund inflow and that is recorded here. Then funds from operation which we calculated through the preparation of adjusted P&L account 1,93,000 rupees recorded. Total sources of funds is amounted 3,46,000. Now let's get into application of funds. We found a reduction of 50,000 rupees in the value of preference shares, which is nothing but redemption of preference shares 50,000. Here there is no premium on redemption, something like that. Proposed dividend paid. This is a dividend proposed in the last year, in 1992, that should have been paid within this year, and that is what the idea of 42,000. The tax amount provision for tax of last year 40,000 should have been paid this year, and that is what about the idea of 40,000 tax paid. Plant purchase 1,42,000, which we found preparing plant account. Please have a look at the plant account. See in the plant account, to bank 1,42,000 rupees. Right, and similarly to bank investment purchase 11,000 rupees, both would have been recorded here. See, plant purchase 1,40,000, investment purchase 11,000 rupees. What is this? Interim dividend paid. Yes, interim dividend should have been provided through the P&L account and also paid this year. So therefore, it was debited in the P&L account and it has been recorded in the application of funds as well. So total application of funds comes to 3,05,000, and in addition to that we found what? Increase in working capital. By preparing statement of changes in working capital comes to increase in working capital. As I told you, increase in working capital is also an application of funds. So if you prepare funds flow statement in T format, you can write this increase in working capital 41,000 in the application of funds. If you do so, you find either side of funds flow statement will be tallied with the total of 3,46,000. So sources amounted 3,46,000, application amounted 3,46,000. So with that, you can complete preparation of funds flow statement. This is a model. This is one particular model. I will release a couple of more videos on funds flow statement covering different aspects which we have not covered so far. Thanks for watching this video. I hope you have understood. My suggestion to all the learners, if you want to understand this concept really seriously, you please watch these videos for more than once so that you gain a better understanding. If you have any clarification, feel free to post your clarification in the comments. I will definitely clarify. So I will be very happy to clarify your clarifications in the, I won't say doubts, clarifications in this problem. So thanks for watching. Have a happy learning, everyone.